Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, June the 18th. June the 15th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. We do not know what the market's going to do. Therefore, we create a plan or a hypo based on who takes control. Then we wait for the market to open, see who's in control, and then execute the plan that best suits the market. This session is going to last about 20 to 25 minutes. I do go through a lot of context lead up to the hypos. If you're watching the video, you can skip ahead. Usually the hypos come in about 15 to 17 minutes into these sessions based on previous sessions. So it is quad witching day today. So everybody be aware of the fact that there's going to be a lot of shenanigans as people roll over and move on to the September contract, and we see all the options expire. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to in the pre-market, and then we do live trading and analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Before I get going, just be aware that we have a zipper measured move. There's the impulse wave here, and barely qualifies right at the minimum at 5.25 points. But the zipper measured move is down here. The target, the primary target, is at 71.75, and it'll remain valid until we get back above the 27.80.25. Just thought I'd point that out. Remember that our week low, and the overnight session low is at 72 itself. So we just put in a new week low in the Globex overnight. So they're likely to go down there and challenge it. Taking a look at the economic news, we just had New York Empire State Manufacturing was a beat, but the market did not react. If you've been watching the session this morning, there's been a lot of algo activity as we see rolling going on. In 26 minutes, we've got industrial production and capacity utilization, manufacturing production. Then at 10 o'clock, we've got University of Michigan consumer sentiment and expectations with the 5-year inflation expectations. Michigan current conditions, inflation. So the main news is going to be at 10 o'clock. And then at 10:30, we've got the ECRI, not a really big one, but the next big one will be at 1 o'clock with the Baker Hughes rig count. So that's what we're looking at in terms of scheduled news. Of course, there can be headline news with our wonderful Trump and everything that's going on with North Korea and new indictments, et cetera, et cetera, et cetera. Taking a look at yesterday. Yesterday, our main hypo 1 and hypo 3 were to get continuation up of the trend. Hypo 3 and 4 was a move back down towards the 78, 74 area. Our fifth alternative hypo that we talked about yesterday was an inside day. And you can see that we spent the whole day just chopping inside of the prior day, mostly inside of this LVN area where they did repair. High was 94. Our week high is, and our month high is up at 96. And of course, our week low is down at 72. And we've gone down there and tested it. So each morning, I like to start my day with a simple candlestick chart. But before I do that, I just want to talk about quad witching right now. If you look at the SPY, the maximum pain right now is 279 and a quarter, 279. We're currently trading 276 on the SPY, so we're likely to make a move at some point in time back towards that 2779, 2780 area today. So just be aware that we are in quad witching, and I'd be very careful controlling your risk today, especially as we move through to the afternoon. So each morning I start with a simple candlestick chart. This is a basic practice that I do. Some people think it's I'll lose a lot of people here. They'll leave thinking that, oh, this is just basic stuff. Well, basic stuff is still the foundation of everything we know about the auction and the markets. I use a 9 EMA, a 20 SMA. I start with the monthly. What I'm doing is I'm checking where we are in terms of the trend in each time frame, moving from the monthly down into the intraday. And what I'm looking for is strength of the trend with slope and separation. Is price paralleling the 9 nicely? Is it coming down and challenging the trend with the test of the 9 or a break of the 9? Or is it violating and possibly starting a new trend by breaking both the 9 and the 20? You can see that we had 14 months of one-time framing up. They did violate the one-time framing in February. Then March, April, and May, we held the 9. And then June, we're getting the continuation. We don't even challenge the trend on the monthly until we get back in the 2769 area, 2669 area, back in the mid 2600s. Going to the weekly, it did look like we were going to get a trend change. We broke below the 9 and the 20, and we were starting to reject the 9 from below, but then they fought it and they took it back, and now we're back above the 9 and the 20. We don't have a lot of slope and separation. We do have a naked cross here at the 2716 and a quarter. Challenge of the trend will take us down into the 2730. So the trend is still intact on the weekly to the upside. Going to the daily, you can see that we came down and challenged the trend, but they took it back, and we've been getting a continuation pattern to the upside. We are coming back down and testing the 9 right now. Remember that the week open is 2772, and the week low is 2772. Our week open is 2776. 75. So we are below the week open, and we're coming down and test it. If we do not hold the 72, look for them to move back towards the 2750 area and possibly come down and challenge the 20. Going to the intraday, you'd see that we have in the Globex rolled over, and we're getting slope and separation to the downside. I'm expecting the move. Remember, we've got the zipper measured move down to 71 and a quarter right now, and likely come down and challenge the overnight low, and then see if we get a bounce from there. The move back to the 9 right now is likely going to take us back to the 2779, 2780 area that I was talking about. And then just moving down to the 30-minute, you can see that we've got slope and separation to the downside. They came back up and failed at the 20, and they broke back below the 9. And we're looking like we're getting a continuation to the downside coming into the RCH session. So let's take a look at the structure of the market, and just let me narrate it just so we put some context here. We had this balancing down here between the 2589 and the 2544 area. They break out of that balance after accepting price at the 2588 and a quarter. Then they go into this trend, and they go in and they put an all-time high. This all-time high is unequalized. The actual all-time high was put in the Globex. This is an RTH, regular trading hour chart. The actual all-time high is 2880. 7 and a quarter adjusted to the September contract, and the RTH is 2884. Statistically speaking, this is very rare that this will hold, and at some point in time we come up into the 28 87 and a quarter and take that all-time high out in the RTH session. Then they try to hold value in the 2800s. They gap down. They make a trip all the way back down to where this trend started and find the buyers, rotate us back up, try to get into the 2800s. They fail at a previous price acceptance level. You're going to see this over and over in the auction. Sellers step in, take us back down. We come right back down, put a higher low in, but back into this balance area. Buyers step in again, rotate us up, and then we've been chopping both sides of this large value area. Then we get this balance area that started with this gap up day right here, and we get the microcomposite VPOC shifts from down here at the 2669 area, comes up into the 2722 area. The microcomposite of the shorter time frame agrees with it. We accept price, and then we get our breakout. Now, after the breakout, we have 2 days of balance, so we accept price outside of value. Okay, then we break higher. We get 3 days of balance. Okay, and they accept that price and they break up. Then they come up here, and for the first 3 days, the sellers kept stepping in right here at the 27.92.50, and they keep pushing it down. Then the price shifts down to the 27.89 area, and then they can't hold that value, and they break lower in the overnight session, and we're now back into this balance area, and with the VPOC here at 27.71 and a quarter, and we have that measured move right now to 27.71 and a quarter. I don't make this stuff up. This is where we're at. If we take now that we've rotated back down into this 3-day microcomposite, we can now take a profile and put a profile over the last 7 days. You can see that we've got a P-shaped profile, and we've got sellers that have stepped in up here at 27.88 and a quarter. We are below the week. Okay, so we have to look at critical mass in terms of below and above, but right now we're below, and we're likely to come and put a new week low in and break that 72 week low and overnight Globex low. If we do not bounce off, I'm looking for a bounce off of this area right here in the 71 area, 71 to 69 area. If we don't bounce off of that, then it wouldn't surprise me, okay, that we rotate right back down towards this level right here where they tried to hold value the last time they broke out of the larger time frame value, and and that would be the next spot that I'd be looking. If we don't hold there, then I move back to test the 2-day balance after the breakout or the actual value area. Our key line in the sand was at 41.75, adjusted to 45.50 before the breakout. That was our key line in the sand above. It now becomes our key line in the sand below. So key levels to pay attention to is going to be this 71 to 72 area, the 60 to 61 area, and then the 50 level to 45 level. Above us, if we can get back above this 77.50, look for the move up into the 27.80, and anything above the 27.81 puts us into yesterday's range and a move back into balance up towards that 88, 89 area. So taking a look at the overnight inventory. Overnight inventory is pretty much 100% net short. We've got a double distribution. The LVN of the double distribution basically starts at 2780 to 2781. So the low from the RTH session yesterday, our VPOC shifted from above to below. We've got a wide fat distribution zone down here, and we're pushing down, okay, towards that low that we just put in after the news. And the algos have been pretty busy down here. We do have a possible FUBAR Mr. Sneaky here, so just keep an eye on this. The buyers might try to step in here and give us a rotation back up to test the 9 from below up at the 75.50 area. So moving our levels over, our overnight low is 27.72. It's possible that we're going to break and put a new low in with the zipper measured move below the 72, but right now that's the low. I got to deal with the information that I have right now. And our overnight high is up at 89.50, just inside of value. We had some very, very strong kurtosis around this 88.25 yesterday, a very tight IB and a very tight value area. This is a valid value area, so watch this 85. If we get inside of this 85, we could kick in an 80% destination, 80% destination trade back up into the overnight high and a trip through value. But right now, we're going to open up with a fairly large gap. Right now, I'm just going to put it in at 74.75. If we open up, I'll have to make the adjustment rate here. 74.75, 88.75 was the close yesterday. So the half gap fill is going to be 81.75 approximately. It puts us right into this trade zone, trade level. And this will be adjusted on the open. I'm just putting it in simply because this is the information I have right now, and we'll just adjust it. Our 20-period daily ATR right now, that's the full session average true range for the daily, is running at 24.70. So currently, off of the overnight high, our daily downside ATR target is down here at 27.65 and currently off of the overnight low, our daily upside ATR target is up here at 27.9675, just above the month and week high. Our week open is at 76.75, so that's going to become our over underline today. Because they're going to be fighting for a positive week or a negative week. I'm going to be looking for longs into the 81 and into the prior day range above it. And I'm going to be looking for a push lower and a takeout of the overnight low if we hold below it. Now, the week open, okay, brings in the possibility of critical mass. Right now, the critical mass, basically, take the week open, okay, take one session daily ATR down, and our critical mass is down here at 27.52. The weekly critical mass is up here at 28.0150. I have no idea if we get there, but if we go into the afternoon as the session continues and we're below A, the week open, below B, the daily ATR, and we get below critical mass, there's less probability that we're going to end with a positive week. So the sellers could capitulate and we could see a liquidation break to the downside. And same thing above. I think it's less likely that we see critical mass to the upside based on where we're trading right now, based on the average true range. But it is quad witching, so anything is a possibility. So there's our levels. What am I looking for in terms of hypothesis? I'm looking for an open auction out of range. We've violated the one time framing up. So I'm looking for a push down this morning, and I'm looking for the takeout of the overnight low, and then somewhere between the 72 and the 69, possibly even the 66. I'm looking for buyers to step in and rotate us back up towards the 27.79, 27.80. Why? Because that's max pain, okay? And they're likely to test test the downside towards this, the 75. They're testing the open interest right now at 75. They might try to push it and put some pain on those with the option open strike of the 2750 area, but looking for an overall move back up into the 2780 and then a late day probe up into test the value area low. So hypo 1, open auction, out of range, a push down, take out the overnight low, and then somewhere between the 72 and the 69, possibly even a bigger push to the 66.75. But I will be taking longs down here and looking for a rotation back up through the open of the week and up into that 79 to 80, testing the range low, filling the half gap, and possibly even pushing into test the value area low. That's hypo 1. Hypo 2 is a open auction out of range, a push up to test the range high and the max pain and the range low, and then somewhere between the 78.50 to the 81.75, 82 area. I'm looking for sellers to step in, rotate us down, okay, come down, take out the overnight low, chop here, and then push through down towards this 56 area. And that is hypo 2. Hypo 3 is a open auction out of range, failure to close the gap, a push down through to the 66 area, chop it between 66 and 70, and then fail and get a liquidation break and push us all the way back down, somewhere down here between the 52, the 55 and the 45, and testing the value area of the longer time frame microcomposite down here at the 45.50. That is my hypo 3. Hypo 4 is a continuation of the trend, a open auction, move down, take out the overnight low, find the buyers, rotate us up, chop and fight between the 81 and 86 area, and then break up and come up into value, take a trip through value up to the value area high in the 89 area, chop here, and then get a late day push and push us up into making a new month high and week high and pushing into this 98, possibly even into the 2800. I'm not sure. The fifth alternative is we get a very open auction out of range, a very wide rotations, but we find balance and we fight the week open and the range high, and we get chopped between the 81 and the 72, and basically a 9 or 10 point range, and just go sideways into the end of the week. So those are my hypotheses for the day. Going over to gold. Gold did break that 9 level, and we got to our target, which was up here at the 13, but then the seller stepped in, and what do? We're coming right back down. We're now back at the most traded price, going all the way back to October the 24th, 2008. This is a major magnet. We're not getting away from it. Now that we're coming down here, okay, if we don't bounce here, okay, remember that the next big destination below is down here. So watch this 93. If we don't hold the 93 level, okay, this time down, I'm looking for a bigger move down into the 85 to the 83 area. And it could get pretty choppy in this area around the composite, VPOC here. So the levels to pay attention to, of course, is going to be the 93. They're coming down and pushing it now. If we can come back and they accept this 95.90, look for another rotation up towards the 1300. But I think that we're seeing some weakness coming in gold, and we're likely to come down. The fact that they did not hold, and we had such a strong rejection of the value area at that 13 level, yesterday, leads me to believe the fact they didn't hold 1300, that they've got to come down and find buyers a little bit lower. And look, we're starting to test that 93 right now. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.